Oil prices are moving higher this morning. You can see on your screen here, WTI crude and Brent both moving to the upside. Now, this comes amid a resurgence of geopolitical risks globally and increased demand driven by summer driving. Joining us to discuss his call on the price of oil is Andy Lipow, Lipow Oil Associates President. Andy, thank you so much for being here this morning. Talk to me about your call for the price of oil and what you think will get us there by the end of this year.
Well, good morning, and thank you for having me. I think the biggest fear in the market is the geopolitical tensions that we're seeing in the Middle East, especially as Israel is reducing its fighting over in the Gaza area, moving troops to the northern border with Lebanon in anticipation of more violence with Hezbollah, which ultimately could bring Iran directly into the conflict. And that's the oil market's concern, because that could spread to interrupting supplies throughout the Persian Gulf region. So between that, as well as increasing demand from now through the end of the year, I'm expecting to see Brent crude oil prices drift up to about $90 a barrel.
Andy, one of my kind of sub things to watch for the rest of this year, which, I had to put on the back burner and save for this conversation, fortunately, was what OPEC may do on the supply side towards the end of this year. What are you anticipating the actions could be for how they might actually spur or put even more supply into the system, and what that would mean more broadly?
Well, in early June, OPEC Plus surprised the market in the sense that not only did they extend their production cuts through the end of September, but they did decide to start reducing those production cuts beginning in October. And those voluntary production cuts, of course, were led by Saudi Arabia and Russia. It's easy to see that OPEC Plus has surprised the market before. They could do it once again. If crude oil prices were to remain in the $80 per barrel range, they could extend those voluntary production cuts through the end of the year. But the initial announcement from OPEC Plus was reacted quite bearishly with the oil market, as they saw more supply coming onto the market sooner than expected.
Andy, how does the presidential election play into your outlook here? Because there are many who have come on our show to argue that the president will do whatever he can to keep the price of oil down heading into November 5th.
Well, the Biden administration has certainly taken a number of steps to do that, whether it's releasing strategic petroleum reserve crude oil last year, or this year recently releasing gasoline in the strategic petroleum reserve in the Northeast. I think post the election, it's difficult for either administration to control the world oil market. The best they can do is through our foreign policy of exporting additional quantities of energy allows us to have more of an influence in those markets. But one can see with the geopolitical tensions in the Middle East, the United States' influence is really limited.
Well, I want to end by going global with you here, Andy. I know that there is a lot of risk globally here. You've got Ukrainian drone attacks on Russian refineries. You've also got the potential growth story in China. You also have the tensions in the Middle East. Which of those seems to be the biggest geopolitical risk in terms of the potential impact on crude moving forward here?
I certainly think that it's in the Mideast. What we've seen from Russia and Ukraine is that over time, Russia has been able to skirt the sanctions. And in addition, the China growth story, continues to dampen enthusiasm in the oil market. We just saw that China PMI was down to 49.5 last month, which is the lowest it had been in the last 5 months. So, of course, that is always dampening the enthusiasm on oil prices.
Andy Lipow, who is the Lipow Oil Associates President. Andy, thanks so much for taking the time here this morning.
Thanks for having me.